Gold has survived wars, crashes, and global pandemics, but now something new is shaking the world's safest asset: artificial intelligence. Setup. For decades, when markets panicked, money ran into gold. It was slow, stable, and trusted. But in the last few days, gold didn't behave the way it usually does. And that's not random. What changed today? Markets are no longer run only by humans. They're driven by AI-powered trading systems. These systems analyze millions of data points in seconds: news, rates, sentiment, and global signals, then move capital instantly. No emotions, no tradition, just speed. Why gold feels the pressure? Gold is still valuable, but it's slow. AI-driven money is fast. When algorithms rebalance portfolios, capital doesn't automatically rush into gold anymore. It rotates, sometimes into tech, sometimes into bonds, sometimes out of safe assets altogether. That shift alone can move prices. The bigger picture. This isn't about gold failing. It's about markets thinking differently. In an AI-driven world, safety isn't just history anymore. It's liquidity, speed, and prediction. That's a major change. What this means for investors. Smart investors aren't panicking. They're adapting. Understanding AI-driven market behavior is now just as important as understanding fundamentals, because the rules are evolving. Closing AI isn't killing gold, but it is reshaping how every market moves. And this shift has only just begun.